Hello and welcome to this session in which we will discuss strategic management. In previous discussions, we explored forecasting techniques like regression, expected value, sensitivity analysis to predict future performance. It was basically part of forecasting techniques. Now, these methods provide valuable insight based on historical data. They look at the historical data and they make a projection. But their effectiveness, how effective they are, depends on managers having a clear understanding of the strategic management plan of the company. So what does that mean? Yes, they look at historical data and they predict future performance. But we need to take management strategic plan into account. What's a management strategic plan? It defines the organization, long-term goals, mission, and direction. So when we take these numbers and we put them into a forecasting techniques, whether it's regression, sensitivity analysis, or expected value, or any other forecasting techniques, they should be aligned, these projection, they should be aligned with the company's long-term goal, mission, and direction in order to support the company's key initiative, whatever that key initiative are. Let me give you a clear example of why strategic management is important as part of forecasting. Let's discuss an example from the real world to make more sense of this. For example, regression analysis can forecast sales. Great. This is a forecasting techniques, but its relevance depends on how well it aligns with the goals like market expansion or product optimization. What does that mean? So a company could predict they want to forecast their sales growth. True. Perfect. We can do that through regression. That's our tool. Is the forecast aligned with our objective? What is our objective? Our objective could be market expansion. Our objective could be profitability. For example, a company like Amazon, when they started, I'm pretty sure when they were forecasting their sales, they wanted to focus on market share. That's all what they were care about. They did not care about their profitability because they want to capture the market share and later on they will focus on profitability, that's what they're doing now after they put many businesses out of business. Companies like Apple Computers, they focus more on profitability. So when they forecast sales, they want to take into account what will be our profitability under those forecasted scenarios. So yes, the numbers are good, but strategic management is important because it defines what we want, our goals, and our goals should be our mission or direction for those techniques, for the forecasting techniques. But specifically in this session, we'll focus on the strategic management process. There are a 5-step process, not 4, 5 steps. How management come to that how management will come up with that strategic management process. So this is what we will discuss in this session. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Hello everyone. Are you struggling with your CMA exam preparation? Do you feel that your review course is moving too fast, too brief, or not covering topics in depth? Well, if that's the case, at Farhat Lectures, we can help you. We build your confidence through in-depth explanation, not memorization or reading the slides. What we will do is we provide baby steps approach to break down complex topic so you can truly learn, understand the material. How do we do so? We offer video lectures, we offer practice MCQs, we offer true-false questions, we offer exercises, we offer the notes. Understanding the material is the first step in passing the exam. Once you understand the material, you have gained the confidence to pass, and you can pass with Farhat Lectures. What can you do now? Start your free trial. You have a 2-day free trial. Take a look at it. Give us a chance. Your risk is 0. You like it, you keep it. You don't like, you cancel. Give us a chance. We can help you pass the CMA exam. Now, strategic management is an infinite topic. There are many papers written about it, research paper, books, that's not what this is not what we'll be discussing. We're going to give you enough knowledge for your professional certification, the CMA exam, what you expect to know. The 5 steps are: first, you have to develop a mission statement. Who starts with this? What's the mission statement? And basically the board of directors or the leadership draft this, creates this mission statement that define the organization purpose. What business are we in? Values, what are our values? Long-term vision, guiding all strategic effort. First, we have to have the big picture, and we're going to cover each of these steps separately. This is the first step. Step 2 is to do what's called a situation analysis. The organization analyzes internal strengths and weaknesses and external opportunities and threat to understand its environment. So this is a SWOT analysis, or they can do PEST analysis, which we'll see later, or they can do both. Step 3, we're going to cover each of these steps separately. Based on the SWOT or PEST or both, management develops strategies to achieve their mission, focusing on competitive advantages, resource allocation, and long-term goals. We'll talk about that as well. Then we have, after we draw the map, draw our plans, we have to implement them. Strategy implementation. The strategic plan is executed across all departments, aligning operational goals with the broader objective through communication, resource management, and leadership. This is where we start to put our plan on the ground and start to execute. Then strategic control and feedback. Obviously, we have to monitor our progress through performance matrix. Well, we said we're going to achieve 10% increase in sales. Did we do that? We have to cut our costs by 15%. Did we do that? Get feedback and take corrective action as needed. And we should adjust the strategy based on ongoing feedback, ongoing economic environment, so on and so forth. So those are the 4 steps. I'm going to go over each step a little bit more in details using a real-world example to get you a better feeling about this. Starting with the mission statement: what business are we in? Why do we exist? What's the purpose of the company? The board or leadership create a mission statement. Usually it's very general. Define the organization purpose, values, and long-term vision, guiding all strategic effort. The mission statement usually is very broad because you don't want, for example, let's take a look at Apple computers. Apple's mission statement focuses on innovation, creativity, and delivering the best user experience. They don't say they want to be number 1 in cell phone sales or computer sales or technology, because they could be moving into other areas. So what you would do in a mission statement is you focus on very general, broad goals. Innovation can do anything. My company, I have innovation in my motto, right? Creativity, delivering the best user's experience. Those are very general mission statement. Here you set the foundation for the company's strategic decision. So in all our decision, focus on innovation, creativity, and let's deliver the best user experience. And if you're an Apple user, you know what does that mean. It's a great product. So once we have the mission statement, the company might go into the SWOT analysis or situational analysis. Step 2, the organization analyzes internal strengths and weaknesses and external opportunities and threat to understand its environment. Now, for example, Apple would conduct SWOT analysis to assess its internal strength, like brand loyalty, cutting-edge technology, as well as its weaknesses, like relying on specific suppliers, sometimes relying on its competitors as a supplier. Externally, it defines opportunities and threats. Opportunities could be expansion in new market. Threat could be rising competition from Android devices. Now, bear in mind, I have a separate recording specifically for SWOT analysis. It's approximately 20 minutes. See the recording. So this is just basically an overview of the SWOT analysis. I'm going to discuss more PEST analysis because you need to know PEST analysis. Therefore, I will discuss it a little bit more in details because SWOT will be covered in a separate recording. PEST analysis is a strategic tool used by companies to evaluate the external micro-environmental factor that could impact their business operation. So what is this analysis? This analysis will give you a picture into the broader context in which the company operates and helps identify also potential opportunities and threats. Now, what's the acronym PEST? Well, it stands for political, economic, social, and technological factor, PEST, each of which play a significant role in shaping the company's strategic management. So look at the political environment, the economic environment, the social environment, the technological environment as you are planning for your future. We're going to go over each of these factors separately, starting with the P, the political factors. These factors relate how government policies, political stability, regulation, impact the business operation. They could include taxation policies, trade tariffs. Think about what the government, how can the government influence you? For example, in high tax countries, you need to be aware of this. If the country has trade tariffs before you operate there, take that into account. If the company is they look at the regulation and you're going to be drilling oil, they're not going to like this. So first you look at the political environment, political factors, labor laws, government stability. You have to understand the political landscape because it's going to help you assess risks as well as opportunities tied to regulation and international relation, because you don't want to operate in a country where all the rules are not working in your favors. That's not an advantage point of view. Government regulation around data privacy is very important. And to do the PEST, I'm going to be using Netflix as an example. Looking at Netflix, data privacy and copyrights laws impact Netflix operation. For example, in region with strict data regulation like the EU, European Union, Netflix must comply with stringent rules to avoid fines. Also, local content requirements in various countries may influence the types of shows and movies Netflix produces and air. In certain countries, they may not be able to air certain shows because it may not politically correct, or the government don't like those shows for one reason or another. So you have to take into account the political factor when you are setting yourself strategically. The E is economic factors. You have to take your economic factors into account before you do any strategic management. This include the inflation rate in the countries where you operate, the interest rate, the exchange rate of their currency, unemployment level, economic growth, so on and so forth. How stable is their exchange rate? You want to work in a country where the exchange rate is not stable? Well, you could be making sales, but when you convert into US dollar, you are losing all your money. So these factors affect consumer purchase power, the cost of doing business also. If you're buying from them, it could be very cheap, could be very expensive because of exchange rate fluctuation. And if there is low unemployment level, you're going to have demand, because if people are working in that market, then they will buy your product and services. You have to take that into account. So the companies will need to monitor these trends to predict market shifts and shift their strategies, adjust their strategies accordingly. If we take a company like Netflix, once again, disposable income is important. So you don't operate in a country where there is no disposable income. What's disposable income? Disposable income is income above and beyond what a family or a person would need, and what they will do with that income. They want to use it for entertainment. Therefore, Netflix might be a viable option. In region where inflation is high or economies are struggling, Netflix may not want to operate there or reduce their subscription price to get some customers. Also, in economically thriving region, on the other hand, customers might be more willing to pay for more premium services, therefore offer them premium services. How do you know this? You would look at the economic factor, level of unemployment, what's their income, income per capita, so on and so forth. The more money they have, the more services you can provide. As social factors include cultural trend, demographic changes, lifestyle choices. This is what we are looking at here. These factors influence your behavior, your preferences, which in turn influence your market demand. Changes in social factors are important. For example, shifting attitude towards sustainability or health conscientiousness can create new market opportunities or challenges for business. So if consumer is health conscientious, McDonald's will struggle. If the consumer is health conscientious, then organic product will do better. For example, social trend for Netflix, such as shift towards streaming services over traditional cable TV, will give Netflix an opportunity, and changing media consumption habit had provided a massive opportunity for Netflix. Why? Social factors. People want things on demand, and they would prefer to have Netflix over the traditional TV. So the global trend of binge watching and the demand for original content have pushed the company to invest heavily in exclusive production like Stranger Things. Also, I'm not a fan of that show, but nevertheless. Technological factors, T and PEST. The technological factor involve innovation, automation, the development of new technology that can either create new opportunities or disrupt existing business model. You have to study those. Staying on top of technological trend is important for companies to remain competitive. Otherwise, someone will do a better job, put them out of business, or they want to keep to enhance productivity. They have to keep on technological improvement and updates, and they need to innovate constantly. So advances in internet speed, cloud computing, and mobile technology has been critical to Netflix's success. And for example, Netflix will not operate in a country where the internet does not have a high-speed internet. Otherwise, the show will keep on stopping every 10 seconds, and they don't want that. Therefore, you look at the technological framework of that or infrastructure of that country before you offer your services. So the ability to stream high definition content on various devices is made possible by these technological advancements. Also, the development of recommendation algorithm powered by AI enhances user experience by suggesting content based on what? Based on their viewing habits. So these are the PEST technological factors, and this is the fourth factor of PEST. Remember, PEST and SWOT are important to study what you need to study. Then you start to develop a strategy. So once the situational analysis, SWOT or PEST or both have been completed, now you sit down and you start to formulate a set of strategies that outline how the organization will achieve its mission that was set up in step 1 and objectives. So these strategies will address the fundamental questions about the organization direction and its operation. What sorts of questions they will need to address? Well, which line of business we will be in. So first, the strategic development, just like decide what product or services the company will offer and whether it should expand into new market or industries. Well, this is defined in the organization's scope of operation. How far do we want to do this? For example, Amazon, I will use Amazon as an example, decided to expand beyond outline retail into new markets such as cloud computing. For example, Amazon Web Services. They're into logistics and entertainment like Amazon Prime Video. So which line of business we will be in? Well, we have to sit down based on the SWOT and PEST analysis, and based on our mission, we need to answer that question. How do we penetrate and compete in international marketplace? If we want to expand globally, how do we do that? It requires analyzing international market. Let's put specific steps, understanding competitive dynamics, and determining how the organization can enter and thrive in different geographical areas. So Amazon has aggressively entered international market by tailoring its operation and services to local demand, especially in India, such as offering localized product and faster shipping time. Keep going with strategy development. How will this line of business achieve its objective? So we have an objective. How would this line of business that we created achieve this objective? So each business unit or division needs a clear plan of how it will contribute to the overall mission. Well, this involves setting specific goals. Here you're going down and writing exactly what you need to be done for product development, sales, customer satisfaction, all while aligning with the step 1, our strategic mission. How do we perform business processes as efficiently as possible? How do we do that? Let's put it down. Whether it's material handling, assembly, shipping, human resources, or customer relations, management must determine how to optimize each process because we want to be efficient for maximum efficiency and effectiveness. Write them down in the strategic plan. This often involved re-engineering processes, adopting new technology, improving communication channel, whatever needs to be done. For example, in Amazon, they continuously work to streamline their warehouse operation, shipping logistics, and customer service processes. This is part of how becoming more efficient and more effective. Innovations like robotics in warehouses, same-day delivery, and customer recommendation algorithm have significantly improved efficiency for a company like Amazon. Great, now we wrote the strategy, that's step 3. Step 4, let's implement the choosing strategy. Implementation required the participation from the entry-level people up to the top. This means that employees at all levels, from senior leadership to frontline workers, need to understand the role in achieving the objective. Now, they may not understand the full picture, but as long as they perform the role and the plan is created for everyone, then we should all be good. We should have incentive system and employee performance evaluation to achieve those objectives. You want to make sure the employees are rewarded for their behavior that help the company achieve their objective. if they reach their sales, if they cut cost, well, you have to do what? Reward them as long as they reach that goal. So Amazon's incentive system, such as performance bonuses and stock options, encourage employees to focus on innovation and efficiency. Collaboration among managers is critical here. Senior managers are responsible for devising the strategies. Middle managers supervise day-to-day operation and ensure that employees are following the plan. And HR managers develop evaluation for compensation plan that reflects strategic goal. So notice each individual, each department, each unit is responsible for something. Senior managers want to make sure devising the whole strategies. Middle managers supervising the people day to day, ensuring that they're doing their work. And we have the HR developing, training, compensating. For example, Amazon managers at every level are deeply involved in making sure that that business unit meets its objective, whatever that objective is. Also, Amazon corporate culture, they have that corporate culture leadership principles, emphasizing continuous improvement, customer improvement, and innovation, and ensuring alignment between individual performance and corporate goals. So what is your goal? It has to be aligned with the company. This is when you implement. This is how you implement. Everyone on the same page. Everyone know their role. You follow your role to achieve the overall objectives. Strategic controls and feedback. At the end, you always have to circle back, make sure everything is working as it's supposed to. As strategies are implemented, now we implemented them. The last thing is we use control basically collect feedback to measure progress toward the organization objective. Are these mid-level, senior level managers, employees achieving their objective? This involves setting performance standards and on a regular basis measuring actual results. So this is what we plan to do. These are the results. Here's the standards. How do we do this in accounting? Think of variances. We do this when we study variances. And I'm sure if you're studying for your CMA exam, you're going to have one whole session, several sessions about variances, material variances, labor variances, overhead variances, all sorts of variances, sales volume variances. So feedback mechanism ensure any deviation from the plan are identified as early as possible and do what? Taking corrective action. So this continuous feedback loop helps refine and adjust strategies over time, making sure the organization stays on course. For example, Amazon uses data-driven feedback to monitor everything from customer satisfaction to warehouse productivity. So it's a continuous monitoring to give you feedback. So strategic control are built in every level of the company, and regular performance evaluation and continuous improvement is implemented throughout the way. More about strategic control and feedback. You have to take corrective action. If performance does not meet expectation, guess what? Managers will take action to address the problem. And this might involve reallocating resources, adjusting goal, or changing how the process are managed. And sometimes we have to go back and maybe change something in the strategic plan itself. For example, based on feedback, Amazon continually refine its business strategies. For example, in response to customer demand, Amazon introduced innovation like Prime membership. This is what customers want. This is the feedback we're getting. Let's do it. And expanded their logistic network to offer faster delivery. And at the end of the day, continual refinement is the key in every business plan. The result of performance evaluation are sent to higher level management for analysis, and based on this feedback, senior management refine and adjust the company's strategies to ensure long-term success. Think about, okay, this is what happened. This is what we plan to do. We did it. This is what happened. Did it happen as expected? If yes, great. If not, let's make some correction. Go back to the drawing board to step 3, start the strategy again, draft it, correct it, whatever is needed, implement it again, and see what would happen. Let's take a look at this multiple choice question from farhatlectures.com. A company's top leadership define its core values and purpose to serve as a guideline principle for all future strategy. Which step in strategic management process is being described? So, which step we define the core values and purpose, and those will be used as a guiding, as an overall general principle for all strategies for all time. Is it situational analysis, Strategic implementation. I would take implement. This is easy elimination. Implementing is not. It's not a value. It's an action. Strategy formulation, mission statement development. So when do you define those core overall values? I would say when you draft your mission, this is where you state in a broad, general terms what your mission is as a company. Situational analysis, remember, that's when you assess your internal strength and weaknesses, like a SWOT analysis, and this comes after the mission. Strategy formulation, after you assess your situation, you will go to the strategy formulation. After you have a strategy, you implement your strategy. But you start with mission development, and that's the answer. That's going to give you the overall picture, the overall plan, the overall blueprint for the company. So the answer is D. What should you do now? You want to go to Farhat Lectures, look at additional MCQs that's going to help you, whether you're studying for your CMA exam, whether you're studying for a professional certification, accounting courses, management courses. Good luck. Invest in yourself.